All right, so today we're going to dive into a little bit of Web3 and talk about not only its future, but also just how Web3 is starting to make its way into a lot of different aspects of business. So we'll break all that down for you today. It's going to be a good one. My name is Paul Barrett. Welcome back into Tech Path. Joining me today is Alex Tapscott, who is the author of a new book called Web3, Charting the Internet's Next Economic and Cultural Frontier. Alex, welcome to the show.
Thanks for having me.
Yeah, so we'll start with a little bit just about the book itself, and then I've got some questions that we'll kind of lead into as well. And I know you guys obviously are involved in an ETF there in Canada where you're from, but give me a framework of the book itself. What was the reason that you guys decided to go in this direction as far as authoring this?
Yeah, absolutely. So, every few decades, a new set of technologies kind of comes together to reconfigure the global economy and the world in some kind of profound and unexpected ways. We saw this with the internet, which was really a convergence of many technologies, content, computing, telecommunication, networks, even some different social behaviors. And now we're in this period in time where there's all these new technologies kind of coming together at once. Generative AI, blockchains, the Internet of Things, and extended reality or augmented and virtual reality. And I think we need a term to kind of capture how all these different technologies come together. And I think a useful term for that is Web3. So let me just explain what I mean. So just as the term, internet has really expanded from its original very narrow definition of internetworking technology to describe a whole new set of companies and business models and social behaviors and so forth. I think the term Web3 is evolving to characterize this new era composed of many different technologies that I've just outlined above. But at the core of Web3 is this concept of ownership, which is why in the book I describe Web3 as the read, write, own web. So in Web 1, I'll just go through a little history lesson here. Web 1 was, the dot-com era of the 1990s, where the internet was mainly a medium for the presentation of information, a way to consume content digitally. And even though it was primitive at the time, it definitely was a great leap forward because it basically democratized access to information, at least for those who had an internet connection. Web 2 was the era of user-generated content, where the web became a platform not just for consuming information, but for sharing and uploading information and communicating and collaborating online. So Web 2 kind of democratized access to publishing, turned everybody into citizen journalists, citizen scientists, photojournalists, sharing photos, thoughts and so forth online. What happened in Web 2 was that all the value that was created from this data was captured by a handful of big intermediaries. And one of the reasons why individuals weren't able to kind of own and control their own data is we didn't have a way to express ownership or digital property rights online. And now the web is entering this new era, Web 3, or what we call the read, write, own web. So now not only is the web a way to read information or consume content or to upload your own stuff, but now it's a way to express ownership of the most valuable assets of the digital age, which are things like data, your identity, your virtual goods, and so forth. And just as the first eras of the web were really transformational for business, I think that Web 3 is going to usher in all sorts of new kinds of commercial opportunities, business models, and new ways of doing things that frankly weren't possible before.
All right, so Web3 is one of those things, obviously it's one of the cornerstones of what we talk about here on our network, but it's also one of the things that I've talked with a variety of brand leaders in a variety of industries, and there seems to be a little bit of a pushback on the term, Web3. In many cases, people look at it much like the early age of the internet, which is and was at that time. If you were around back in the mid 90s, a lot of people looked at it as kind of a gray space, a little bit suspect, for the growth of business, and in most cases didn't really understand what the real use case was going to be. When you look at history repeating itself, even though I think we're still dealing with a lot of Gen X and boomers that are running these companies, when they look at this new technology, even though mobile and social have kind of already given a little bit of examples of how this technology can advance not only society but business, do you feel like we're going to continue to get pushback like that on the term Web3, or do you think people are just going to eventually kind of say, okay, it's the new internet?
Well, I think there are always going to be people pushing back. That's a reality of life. Leaders of old paradigms are often the last to embrace the new. They react with humor or derision or sometimes hostility. And we've seen opinions like that proven wrong time and again, whether it was in relation to the automobile or the radio or the transistor or the iPhone. Steve Ballmer once said that no one would buy an iPhone. And a lot of people at the time thought, iPhones won't sell because what people really wanted was a high-end camera, a high-end cell phone, a high-end computer. What they didn't realize is they wanted it all together.
Yeah.
So in a way, I think that it will take time to for those people to adopt it. This is a classic situation that appears time and again in different marketplaces, and it's defined often as the innovator's dilemma, what Clay Christensen said. And he said basically, oftentimes when a new technology comes along, it's not particularly useful, at least not right away, for a lot of well-run large companies and their best customers. Oftentimes, it's a niche within the market that is the first to embrace new technology. So I think of Web3 very similarly. I'm not sure that the biggest customers, the biggest advertisers on Facebook or the biggest customers of JP Morgan are clamoring for those companies to embrace these tools because they don't really rely on them and they don't always understand them. But what we are seeing is a not fringe of the market, but niches within the market where many of the attributes of Web3, things that some incumbents might view as a liability, like say self-custody, are actually one of the biggest benefits of this technology. The idea that you can control your own, you can have sovereignty over your own identity and your own assets, and you can decide how you use them and who you send them to peer-to-peer is a superpower for a lot of people, but for others an inconvenience, right? And so in a way, it kind of depends on your perspective. Now, what Christensen also describes in his book is that over time, the niche continues to grow, the technology becomes less nascent, and eventually it becomes the preferred way of doing things for everybody. And the incumbent that was, resistant to change is end up caught flat-footed, and they then have to catch up and try and adopt this technology. So, in many respects, naysayers of new technologies are nothing new. The Luddites were the first to decry the introduction of automated, looms in England, and time and again we've seen moral panics and resistance to change to new technologies, and this time is obviously not different.
I look at it, when we get a chance to interview a lot of executives within the Web3 ecosystem, many of which are building today on a variety of fronts out there, whether it's the gaming sector, the evolution of what NFTs and utility are starting to map into, along with digital ID, if you just think about Unstoppable and some of the things they're doing. But at the same time, as someone who is a study of this, along with, and of course I kind of cut my teeth in Silicon Valley, grew up in the age of mobile and social, and I look at this, understanding the tech, I get a chance to interface with it quite often, and I look at this onboarding problem that we continue to face. I was just doing some testing with Unstoppable today in just doing some NFT transactions by linking wallets. And even with something as, I would say, as groomed and well produced as what Unstoppable has done, there is a huge disconnect of being able to truly make it useful. I mean, if you are not a Web3 native person, you're completely lost. I was trying to show someone this very process, and it was almost like trying to show somebody how to set up an email address in 1998 or 1999. So do you think that we're going to have that kind of learning curve cycle, or do you think it's going to be faster?
Well, I think what you've described is very accurate, and I think that that's exactly what we're experiencing, is a learning curve that is going to take some time for people to get comfortable with, so long as the user experience is not intuitive. I mean, dating back even further in the 1990s, imagine just trying to get online in 1993 or 94, having to get a modem connected to your home phone line, connected to a desktop computer, sit there for 10 minutes, and then a website would load. And what could you do with that website? Well, not much. That was Web 1. It was the read-only web, and it was a way to, consume content. And that was really all the web could do. Having said that, Paul, I think a lot about what some of the benefits are of Web3. I know, for example, that you're familiar with the Web3 gaming space. Yatsu of Animoca Brands describes the benefit of user-owned networks and how powerful it is for users in, say, a gaming environment to be able to own their own digital goods, to sell them peer-to-peer, to participate in the wealth creation that happens if those assets improve in value, to be able to be owners of the networks and so forth. But does everybody want to do that? Does everybody want that in their life? I'm of the view that if you're going to pay for something or you're going to earn something, you might as well own it. You might as well have property rights to it, whether it's a digital creation or a creation in the real world. But for some people, they may just be interested in one single experience. So perhaps, at least in the early stage, the Web3 adoption curve looks something similar to, say, console gaming, where video gaming is a huge industry, and console games were massive. But at the mid 2000s, they kind of topped out at 800 million people. There weren't more than 800 million people prepared to go buy an Xbox or a PlayStation. Maybe there are not more than 8 million people who are prepared to be custodians of their own digital goods and move them peer to peer, at least not initially. Now, gaming is also instructive because when the interface changed and people started to use phones and other devices to play games, the barrier to entry lowered, and all of a sudden it became something ubiquitous that everybody uses. And so I think that you could see Web3 tools following a very similar growth curve.
Yeah, I look at it, because we here on our channel try to identify these early movers. If you think about, you mentioned Yatsu, Animoca Brands, probably one of the innovators within the gaming space. But you're also looking at some major investors. I'll talk about Kathy Wood in a minute because she's made some interesting moves here. But back to your point is this adoption curve. Now, when you look back at even the mid 90s and the growth of what we knew as the internet, even then there was still an AOL.com, which gave it almost the segue in to usher in a lot of adoption from the normal people who had never really done anything before. If you got one of those discs in the mail, if you're that old and you know what I'm talking about. Who do you think the AOL.com of Web3 is right now? And or have they been created?
Yeah, I'm not sure that exists yet, to be honest. But what you're describing is an interesting dynamic that exists in Web3, which is people wonder whether or not it's a good thing if big companies come along and embrace Web3 tools like tokens or smart contracts or stable coins or whatever, and whether or not they also simplify the user experience by providing, custody or, account, reclamation or whatever. And I think it's an interesting discussion because on the one hand, we saw what happened with a bunch of big centralized companies like FTX. When they became too big to fail and then collapsed, it damaged the market significantly. So we don't want on-ramps to the industry becoming the industry. The whole idea of the asset class is that you can hold these assets and custody them and move them peer-to-peer. You don't need to rely on a trusted third party. On the other hand, for a lot of new users, having an on-ramp is really convenient, and having a partner in that world is really convenient. So I like to define it as missionaries, mercenaries, and pragmatists.
Okay.
So there are the missionaries who are dead set on one very specific narrow point of view, and they're very passionate about that, and I think that they're some of the smartest people building in the space, whether they're people who are dedicated to the Bitcoin community or dedicated to DeFi protocols only or whatever it might be. And then you've got the mercenaries, and those are the people who smell a buck and jump into a new market to try and capture value. And then when Web3 is out of favor, then it's on to the next thing. And then you've got pragmatists, and I think the pragmatist route is the best way to travel, which is that the dogma of decentralization is something we should never forget, and it's really important. But it's okay to make certain trade-offs in the name of expanding Web3 to the world. And so I think that a lot of really smart people are coming up with these Web 2.5 models, or whatever you want to call it, where it's not full decentralization. What it is using the Web3 toolkit. It's opening up the toolkit and looking inside the box and saying, NFTs would be a really great way to, create token-gated communities that we can, improve, give people benefits to, and as a way to strengthen their loyalty to our brand. Or stablecoins are a thing we should integrate, like Visa or PayPal did, as a way to improve real-time settlement between merchants and customers, because it's just a better technology. Like, there's nothing wrong with that. Those are good things. We should be encouraging it when big companies embrace this stuff. And so, to me, it's all about finding that balance where you don't want to give up the goose. You don't want to trade off the thing that makes it special. But you also have to understand that you need to, make trade-offs in order to grow.
Yeah, I mean, to kind of validate on your point there, I was looking at just active validator node hosting. This is when you look across the chains, this is Avalanche, Cardano, Near, Solana, Aptos, etc. And you'll
Yeah.
notice here that AWS, because I would consider more of like a Web 2.5 company, pretty
Yeah.
much controls so much of this node outside Solana at 2.3, but Aptos, Cardano 16%, Avalanche 41%, obviously with their partnership. But my point is, there's a lot of those kind of companies like an AWS or an Amazon that are leveraging heavily into what's happening now. Even Amazon, obviously, with their NFT gaming moves here recently. Do you
Yeah.
think those are the kind of companies that will lead the way?
Well, it's such an interesting point. A lot of people will say, well, what's a DeFi application is decentralized in name only if, it's on a blockchain that is being hosted on Amazon Web Services. So what we
Exactly.
really
Yeah.
need, are, decentralized computing networks like a Cash or Filecoin or something like that to act as the back end. And so everything is truly decentralized. And, I hope that at some point that is how things work, right? But in the meantime, it doesn't mean DeFi is a bad idea because some of these blockchains are running on centralized or that they're being hosted on traditional sort of cloud servers. So I think that that's a classic example of how we need to separate the end state of what we'd like to see versus how we get there. It's okay to get there in one way, right? Where you're relying on those entities. In terms of those other companies, I wouldn't describe AWS as a Web 2.5 company. I would view it as a incumbent that is embracing new technology tools because it makes good business sense. And this is something that entrepreneurs and executives and it's the most successful people in the world have been doing forever. Like Cornelius Vanderbilt. A lot of people remember him as this industrialist who owned all these railroads. He actually got to start in steamships. He actually got to start in sail ships, ferrying people back and forth between Staten Island and Manhattan. When he got enough money, he got into the steamship business. But by the 1860s, he had divested of every single steamship that he owned because he saw that railroads were the technology that were opening up the industrial might of America and opening up the West. He recognized that this legacy technology was not going to grow as quickly as this new technology. So if you're Jeff Bezos, I know he's not the CEO, but there are very smart people in these organizations where they might say today, what's an NFT gaming thing to AWS into their current, quarterly revenue model or projection, irrelevant. But in the long run, it's something that could be, very material and something that they want to be investing in. And that Vanderbilt example is actually kind of instructive because it's not like he decided one day, I'm out of steamships, I'm into railroads. He was investing in both for the whole 19th century and just steadily building more and more and more capability in railroads. Even at the time, they were basically like glorified streetcars running from, New York to Connecticut or New York to like Boston. That was about it. But he kept investing to the point where by the time they became so valuable and so commercial, he was going to be the dominant player. So, who's the Cornelius Vanderbilt of today? Or who are the incumbent CEOs and executives who have the foresight to embrace a new technology? I think Amazon's a good example of that.
Yeah, for sure. I was looking at your Ninepoint ETF and kind of just the focus of what you guys have really kind of featured here: Web3, blockchain, digital asset, Web3 companies. Obviously, most of the companies here that you guys are involved in are kind of fall into this HUD 8 here. A little different. I know Sue Ennis over there. And what they've been trying to do is to kind of diversify into, whether it's AI or more compute power. Do you think we're going to see more companies that would be identified as potential investment opportunities that would truly fall into that Web3 bucket in the future? Because right now, not a lot of companies fall into that bucket today.
Yeah. Well, I mean, I would say first to anybody who's listening, you've got to make investment decisions for yourself, and everybody's sort of risk tolerance is different. But when it comes to our strategy, our view is pretty simply that right now there are several ways in the public markets to get exposure to the growth in Web3. And we have several themes that we look at, whether it's the growth in, the digitization of financial services or the growth in the metaverse or enterprise adoption. And my view is that there's going to be a multi-decade tailwind in terms of the growth of the investment universe. So today, there are plenty of companies that, might nominally say that they're interested in Web3 or might have, made some investment here or there. But that's not a reason that doesn't mean that they're a Web3 business or that they give you exposure to Web3 on a pure play basis. What we look at is companies that are not only the ones that are either fully geared to this sector, or the ones who in the long run, like Mr. Vanderbilt, are thinking long term and planning for a future where these tools are going to be a much bigger part of the economy and much bigger part of their businesses. And I think that for most public equity investors, there are few, if any, options for how to get exposure, and so in the fund world. And so we're trying to create something that's useful.
Alex, what do you make of, because I look at just the definition of Web3, it often, just like in the birth of the internet, mobile, social, all those different technology advancements helped create almost new cottage industries within each one of them. And you look at what Web3 potentially will do. We're talking about tokenized assets. So here's just a quick story. Coinbase and Aave, of course, form a coalition to promote tokenized assets. And a few things happening here within it that I wanted to kind of get your opinion on this. First of all, a lot of people now looking at real world assets. This is kind of where this is going now, these subsectors of a space where we would get tokenized treasuries. And there's some growth already starting to happen in this area. So you look at that, even they've gone as far as building out an asset coalition. So you got some of the biggest companies in there. Everybody's going to recognize these names. If you're not watching this, it's companies like Circle, Coinbase, RWA, of course, and even Goldfinch Basin here as well. With this being the case, I mean, how fast do you feel that tokenization will really take place, especially within things like the securities markets and other industries? Where do you see that going in the future of Web3?
Yeah, well, I mean, I think that the tokenization of real-world assets is a multi-trillion-dollar opportunity in this industry, and it's a big focus actually of the new book that I've got out, Web3. We have a whole topic in a whole chapter on assets. Actually, the book is organized in a way basically where we look at transformations, starting with assets. So this is, to me, the fundamental innovation. We have a new medium for value that allows us to program assets digitally, right? And so that can be cryptocurrencies that are meant to be a medium of exchange and a store of value, but it can be basically used for anything. A token is a container for value. It can contain anything. It can contain art, collectibles, votes. It can contain IP, but it can also contain securities, claim on a commodity or a piece of real estate and so forth. And there's no technical limit to that at all. Not any that I've seen, other than the usual about how performative are blockchains or whatever. But we can create tokens of real world assets. So the technology tool is there. The question, though, is I think still a matter of the regulatory position, regulatory situation, and the commercial situation in general. So I'm of the view that it's unlikely that we'll be trading tokenized Apple or IBM or Royal Bank of Canada or Microsoft stock anytime soon. I think what's probably much more likely is that tokens become a way to express ownership in new digitally native organizations. And frankly, we already have that. A lot of governance tokens for DAOs and other protocols and DeFi give people similar rights, ownership and governance, and the opportunity to see appreciation and so forth. And so we've already seen that play out in that world, and we know that it works. So the only reason why it hasn't moved as quickly as I think it should have is because there's a lot of regulatory uncertainty about these assets. And ultimately, the mantra in Silicon Valley is, move fast and break things, as if a regulatory vacuum makes it easier to innovate. But actually, typically a regulatory vacuum makes it harder to innovate, because a lot of businesses are uncertain or unwilling to make big investments, multi-year investments, if they think that the sand beneath their feet is going to shift. I mean, this is what happened to Coinbase. Like they domiciled in the United States. They interacted with their regulator. They had U.S. investors. They employ Americans. They went public on the U.S. Major U.S. exchange. They cleared their prospectus with the SEC. They engaged with the regulator 20 times after they went public, and then boom, what happens? They get sued. So, if that happens to Coinbase, it can happen to anybody. So we need to have greater clarity in order to prime the pump to make tokenized real-world assets. Until that happens, I think it's going to be more of a cottage industry, as you pointed out. On the margin, it'll be useful for a lot of things. Like maybe you want to tokenize a piece of valuable real estate, or maybe you want to tokenize a piece of art or something where there's no ready liquid market. And so
Mhm.
therefore it has value, even though there may be additional hoops you have to jump through. But if we want to really blow the doors open and make this thing widespread, you need to have clear rules of the road before we do it.
Yeah, for sure. And I think, to your earlier point in the conversation is maybe the channel that's going to get the most traction is going to be gaming and what that might look like within, because it'll be recognizable. It also will come into a demographic that is going to grow with it, over time, which is, I think, going to be a big part of that. Talking about that, I was looking further into Mythos Chain, which is a company, Mythical Games. Kathy
Yeah.
Wood, Yatsu, both, of course, are behind this organization. One of the companies one of the projects, I should say, that we're continuing to see pretty massive growth in a downtime, meaning that the business model of in-game assets and potentially NFTs is going to become a real thing. It's just a matter of who is going to win that. Now, when you look at the traditional gaming market as it is, whether it's Epic or others, and even what we're seeing already within things around Sony and Microsoft starting to make plays into this market,
Yeah.
when do you think they will be able, and I say they, meaning the major gaming industry, be able to recognize what's happening here and make the leap? Because that's a pretty big chasm to come across right now.
Well, I think it's going to take time for incumbents to come around. When we made the move from console gaming to mobile-based free-to-play gaming, a
Yeah,
lot of the early hits came out of independent studios. Because for a studio that's used to making Halo or Metal Gear Solid, Angry Birds seemed like kind of a step down for them, right? And so we saw independents really experimenting on that new gaming frontier. But what ended up happening is that once mobile devices became sort of the main way in which we interacted with games, a lot of those developers realized the potential and came to embrace that technology. Now, what was really interesting about that experience is that it didn't actually shrink the console gaming market. It actually grew the console gaming market. Because what happened was by onboarding billions of new gamers, people discovered that once they played something on their phone, maybe they wanted to try it in a more serious environment, whether it's PC or Xbox or
yeah,
whatever it might be. And so I think this time around it'll be something similar. So you've got Animoca Brands and Blowfish Studios, and you've got Parallel NFT and these other gaming platforms that are all independent, that are all mostly focused on Web3 native gaming, really pushing the frontier of what that might look like. And now you're starting to see Activision, Blizzard, and Sony, and
right.
Sega, and some of the others coming in and tinkering away on the margins. But in a way, it's like back to the innovator's dilemma. If you're making most of your money doing something else, you don't necessarily want to upset the apple cart too quickly. So that reluctancy is going to create a huge opening for the Animocas of the world to really carve out a real leadership role in this area. And then when the time comes, yeah, maybe those legacy studios enter organically, or maybe they buy rather than build and acquire these studios. I think what's interesting though is that what Web3 gaming could do is potentially upend the whole business model of gaming as it exists today. So right
Yeah,
now, and I find this is one of the reasons why I'm bullish on gaming. And I'm almost and I you pointed out the growth of these platforms, but I'm almost perplexed that it hasn't grown more quickly for this very simple reason. You have a predominantly younger demographic of people who are more digitally native, and they're people who are already spending billions of dollars buying digital goods. They just don't own those digital goods, right? They're purchasing them. They're doing the act of buying, but without the actual rights that come with ownership. I mean, platforms like Roblox and Fortnite and others, these games rather, are making billions of dollars selling virtual goods to players, but those players aren't necessarily able to, experience the appreciation in those assets, or sell them peer to peer, or to take them off of the game, or to
right.
protect their privacy or their property rights to those assets. So if you can basically say to a user, hey, you're already buying assets, why not own them? I mean,
Yeah,
it does seem like a very kind of intuitive thing for people who are already spending money on virtual assets, and you
yeah.
don't
I
have to
have a
convince
whole I have a whole
that.
theory on that for sure.
Yeah, please,
Because
please explain. I'd love to hear it.
well, okay, so I look at it much like the media business. I've been in media for 25 plus years now,
Yeah,
and I had to kind of, pull people off of the print magazine era into online, pull them off of online into mobile, pull them off of mobile into social. And the biggest problem is that most of the gatekeepers that run these organizations, whether you look at Activision, look at what's happening with Microsoft, look at Sony, in most cases they control how the users actually interface. So the users, unfortunately, are the plebs, and they always will be until they break loose. Just like media has happened today, the only reason we're starting to see a really decentralized or fractured media is because we saw all of these, whether you go left, central, or conservative, that have broken out, and they've been successful at it using, a variety of platforms, podcasting, YouTube, etc. I think that's the problem we're facing right now. Until we start to see these renegade companies like Animoca Brands, companies, that are really truly renegade away from the status quo, I don't know if we get them there yet, because you've got to have the vision in place to help the players become and see reality. Otherwise, they're just being guided by the nose.
well, what you've described is even more true almost in the world of gaming than it is in any other sphere. Because
Exactly. Yeah.
right now it's like you got the independent studios, and then you
Mm-hmm.
got who are doing the NFT stuff, and then you've got the legacy studios. And we think those are the big, 800-pound, gorillas in the room, or whatever the expression is. But actually, they're little players that are operating on top of huge platforms controlled by Apple and Google. And
Exactly.
those are the platforms. I think the battle between Epic and Apple is well publicized.
Mm-hmm.
But basically, like a lot of these app developers, especially gaming studios, bristle at the economics of being in the app store, where a huge share, of all of the purchases that happen in game or downloads end up, having to pay like a 30% tax to one of these big platforms. And that's actually one of the reasons why Web3 gaming has been slower to take off
For
on
sure.
mobile, right?
Yep.
Because how does Apple going to track when someone moves a virtual asset from one Solana address to another, one Ethereum address to another? They can't. They can't actually see or track that. And if they can't see or track it, then they're not going to permit it because
Yeah.
they're worried that they're missing out on this economic
Revenue.
in-app economic activity, right?
Yeah.
And so that's why a lot of these Web3 applications on the gaming side are still like largely desktop only. So that's this is a much bigger conversation about, well, is there a way to break the duopoly in the operating system world beyond Apple and Google, where we can build our own operating system that runs on our own hardware? Like I think Solana is really trying to do that with their phone, but I think a lot of people think it's kind of a quixotic mission, right? It's like you're tilting at windmills. You're this little blockchain thing, and you're trying to go up against
Yeah.
multi-trillion-dollar enterprises. But everything seems impossible until it's done, and we've
Yeah.
seen the
Exactly.
David Goliaths before, right? In every industry. So I'm not saying it's not possible, but I think that's what we're up against.
It definitely, there's a whole theory around that for sure. I think there's a lot happening right now. I think your book timing is perfect, because there's a lot of, I think, business executives in general who are trying to, one, understand it and really kind of bridge that gap into this next generation of where technology is going. But to your point, and I've been guilty of this many times, just being way too early on many different industry adventures that I've done throughout my career. And I see
Yeah.
those kind of markers right now with Web3, but in general with blockchain, until we really start to see innovation. The only thing that gives me really good hope here is that the acceleration opportunity is here. And I think,
Yeah.
like to you, it happens really slowly, and then the gates open up, and eventually you see that massive move. So, Alex, hey, it's
Well,
been
that's
great. If you guys
actually.
want to go ahead.
Oh, I was going to say one other thing, which is actually the book ends with a discussion of the concept of an S curve, right? Which is what you're
Yep.
more or less describing, right? The idea that
Hmm.
there's a lot of R&D and a lot of work and a lot of tinkering that goes in the early stage, but it leads to very limited sort of economic growth or value capture, and then all of a sudden it hits an inflection point where
And it's
every
just,
investment leads to huge orders of magnitude worth of improvement. And I feel like we are near the inflection point with Web3. And so, yeah, I do hope the book is is timely. We basically, the way that I think of it is, Web3 is the internet's next economic and cultural frontier. Frontiers are full of opportunity, but they come with some risks. So everybody needs a field guide. And so this is the field guide to the next economic and cultural frontier.
Yeah, for sure. Listen, if you guys want to check out Alex's book, just go to his website, Alex Tapscott. You can catch all of the places where you can grab it there, of course. So grab it on Amazon, pre-order it. Now, when is this actually released? Does it drop this week?
The 19th. So Tuesday
19th.
the 19th
Okay.
is when the book comes out. It's available for pre-order now. If you pre-order now, you'll be one of the first people to receive it. So
very cool.
Check it out.
Alex, thank you so much for stopping in today. We appreciate it.
Thanks, Paul.
You bet. All right, so you guys are, of course, if you tuned in over on the podcast side of things, jump over here to the YouTube channel. You can get a chance to not only catch more content like this, but you can also subscribe to some of our live streams. So it's very easy to do. Make sure and smash the like button. It always does help others start to learn about what's happening in this space. And I think Web3 is one of those topics that in many cases, people just don't have enough information. So that's one of the ways you can help. Of course, if you want to reach me, you can catch me out there on X, which is just @PaulBaron. We'll catch you next time right here on TechPath.